All right, let's get you an update on what's moving markets around the world. Kathy Yang's been tracking the markets, and she joins us with the details from Hong Kong. Kathy.
Hey, Chris, what a day it's been for Asian stocks and the first trading day of the quarter. Stocks here swayed between gains and losses. There's been some concern over the spate of the share sales diluting holdings of equity investors. Falling commodities also drove resource producers lower. Over in Japan, where people are now pricing in a slower recovery. Japan's Tankan survey rebounds, but not as much as forecast. The improvement is good news to some, but skeptics are worrying now about whether the recovery is going to stick. Outside of Japan, more signs of a recovery. China's manufacturing expands for a fourth month in a row, reinforcing the government's plans to meet its 8% growth target this year. The data helping the Shanghai Composite Index breach the 3,000 level. We haven't seen that for the first time in more than a year. Shares on the index trade at the priciest level since March of last year. Now, Australia's domestic economy looks just as encouraging. Retail sales there rising twice as much as forecast, thanks to those interest rate cuts and cash handouts. And in corporate news, Toyota Motor hitting the skids. Toyota's rating gets cut by Fitch due to the slump in car sales. Shares fall 1% in trading in Tokyo. And Aozora and Shinsei agree to merge, making it the sixth biggest bank in Japan, both banks needing each other to repair finances amid the global recession. Shinsei and Aozora shares both ended higher, each over 1%. That's what's happening here in Asia.